pay people to buy it.
Long Island on our line for Republicans. Rich, thanks for waiting.
Hi, how are you?
Good morning.
My problem I hear all the time is, if you lower the top marginal tax rate, it creates revenue. And I believe that's false. I believe when the example that most conservatives use is when John Kennedy lowered it from 90% to 74%. But in fact, he closed many loopholes, which actually resulted in increasing things. It wasn't the stimulus from lowering the taxes, it was closing the loopholes that created the extra revenue. And number two, that when you'll have to excuse me a minute, I think they should be rolling back the Reagan tax cuts back to 74%. You say that these small businesses can't create jobs if they're being taxed so high, but in fact, it's just the opposite. Because if you are forced to pay 90% tax on your profits, instead of taking those profits, you're going to put people to work. Because you put people to work with pre-tax dollars. That's it. Thank you.
Well, I think you're making my point that if the government's taking 90% of a small business's profits, it doesn't have a lot of profits left over to buy new equipment and new computers and more technology and hire more workers. So obviously we're shooting ourselves in the foot economically. If we're trying to create more jobs, which is the #1 goal that we have to achieve right now, we've lost 5 million jobs in the last few years. To get those jobs back, what we need to do, I think, is lower taxes on American businesses to bring capital and jobs back to the United States. And the evidence is very clear. If you look at our book, The End of Prosperity, you'll see the evidence is so clear. The big 3 years when we cut tax rates were the 1920s, the 1960s, and the 1980s. And in each of those periods, two things happened. One is tax revenues increased when we cut tax rates. And the second thing that happened, even more surprisingly, was that the share of taxes paid by the rich actually increased. And by the way, the third thing that happened in each of those periods is we had enormous increases in jobs and prosperity.
Next up is Lynn in Stockton, California on our line for Independence.
Good morning. How are you, gentlemen?
Morning. Great.
I just wanted to call and kind of agree with you in part and kind of maybe disagree with you on another part.
Sure.
As far as the creation of jobs and companies creating jobs and whatnot, I think that the only way that we are going to ensure that Americans are put to work is perhaps doing a moratorium on job outsourcing, something in order to make sure that it's Americans that are being put to work. If companies can't agree with those guidelines, perhaps maybe they should move to the country where they're outsourcing their jobs then. You know, I mean, as far as the tax cuts go, we really need to just clean up the tax code all the way around.
Yep. Well put, man. I completely agree. I just did my taxes this weekend. There's no reason it has to be so complicated. I mean, when you have 4 members of the Obama cabinet that can't figure out the tax code, when you have the chairman of the Ways and Means Committee, which is the committee that is in charge of writing the tax code, when Charlie Rangel cannot figure out the taxes, or else he deliberately didn't pay his taxes. I mean, we have a big problem with our tax system, and there's no reason it has to be so complicated. A postcard return, like Steve Forbes was talking about, you pay 19%. If you have income under $30,000, you don't pay any income tax at all. I think would be so explosively pro-growth. It would be so simple. It would take 5 minutes to fill out your taxes. And then the other point about this that is so important is, you know, somebody called in about K Street, that I belong to K Street. Look, I want to put K Street out of business. I don't want all the lobbyists, and I don't want all of the special interest pleading. Under a flat tax, there are no special interest provisions in the tax code. The problem we have, I think, with the direction the Democrats are going with the tax code is they're raising the tax rates, and then they're adding in all these new carve-outs and credits. You know, if you buy this car or that car, if you weatherize your home, if you do this or that, you get a tax break. I mean, that's the essence of a bad tax system. You want a low-rate system and a broad base, and that's what either a fair tax or a flat tax would give us.
You've authored 5 books. Like we said, you're a member of the Wall Street Journal editorial board, graduated from the University of Illinois and hold a master's degree in economics from George Mason. This weekend, did you do your own taxes or did you outsource it to somebody else?
Rob, I am really embarrassed that you asked that question. My wife did our taxes, so she's been in a very bad mood, but we, she spent, and we also had to have an accountant help us, and right now over half of Americans have to use an accountant to do their taxes. I mean, that's just a waste of resources. The tax system just doesn't work.
Next up, Jacksonville, Arkansas. Roland.
Yes, Mr. Moore.
Hi.
I am so glad to speak with you.
Me too.
I want to try and correct you on something.
Okay.
You were saying about how Kennedy lowered taxes,
Right.
and of course, Jimmy Carter, he messed up the 70s, and
Right.
Reagan lowered taxes.
Yep.
And Clinton, he raised taxes and he boomed the economy, and
Right.
Bush did this.
Right.
But, sir, no president can raise taxes or lower taxes. No president. It takes Congress and the Senate.
That's
and
true.
the minute the American people learn this, the minute the American people find out it's not your president, it is your representative that increases your taxes or lowers
Yep.
your taxes, because they send the bill to the president. He does nothing but sign
That's
it.
a good point. Yep.
Presidents do not raise taxes or lower taxes. It is your Congress. And if you look at who is in your House of Representatives, then you will know who is raising your taxes, who is lowering your taxes. And I wish you would repeat this constantly when you on different stations. Please let people know it is not the president.
I think it's a fair point. I mean, sometimes we do give the president too much credit and too much blame, when of course Congress has at least half the power. But we have a powerful presidency model in the United States. I mean, the president proposes big things, as we've seen Barack Obama do in the last couple of months. A dramatic shift in the direction, and this Congress will go along with a lot of that. Ronald Reagan proposed big ideas when he came into office. So we traditionally give presidents the credit or the blame, but this gentleman is right. Congress has a big say in all this as well.
Westminster, Maryland. Paul on our line for Republicans.
Hello.
Hello.
Yeah, I'm on the line.
Yes, you are.
Okay. I just want to point out a couple of things. I was watching the show, and one of the things I noticed right off the bat was Reagan about lowering the taxes.
Mm-hmm.
He didn't lower the taxes down to 28 from 70 to 28 till his second term, not the first term, and he actually didn't lower it. The man was right about Congress doing it.
Mm-hmm.
The other thing is an awful lot has been done or said about lowering the taxes created this prosperity from
Yep.
Reagan.
Yeah.
When in fact oil prices went from $35 a barrel to less than $10 a barrel.
Yes.
And oil was the primary reason for the problems in the 70s,
Yes.
from 3 to 35,
Right.
more so than lowering taxes. The other thing was you said that Reagan or Obama has proposed more, his deficit is higher than all that Reagan spent. His deficit in the first year, if you take the real deficit that pushed that up, is double or less than double. Reagan doubled the deficit immediately, just the actual deficit, and almost tripled the national debt in 8 years. So I don't understand where Obama's really that much different than Reagan.
Well, I mean, you're right. And the deficit certainly did go up under Ronald Reagan. By the way, on this energy point, it's a really good one. We talk about this in the book, The End of Prosperity. I mean, what happened was that the reason that oil prices went up so much in the 1970s was that inflation grew out of control and our dollar deteriorated. So the major reason that we faced, remember, those $35 a barrel price of oil, and that was back when $35 was a lot of money, was precisely because we lost control of the money system. And one of the great accomplishments of Ronald Reagan, aside from cutting tax rates, and the reason we created this wave of prosperity, was we brought inflation. Remember, inflation grew to 14.5% in Jimmy Carter's last year in office, when he just completely lost control of the inflation. We brought inflation down from 14.5% down to about 3% within 18 months. And by the way, Paul Volcker was the chairman of the Fed at that time, and Paul Volcker is an advisor to Barack Obama. I hope that Barack Obama listens to Paul Volcker. But it was the combination. I mean, this gentleman is right. What caused the prosperity of the 80s through the 1990s was the combination of lowering tax rates and lowering the inflation rate from 14% down to 3%. And once we got inflation and taxes under control, boom, this economy went wild. We created 45 million jobs, folks, over the last 25 years. That was twice as many jobs as Japan and Europe did combined.
Stephen Moore, thank you very much for being on the program.
Thank you, Rob. Really fun.